Welcome to Illuminati Silver. We tell the truth about silver. Today is Friday the 8th of May 2020, and yesterday we published a market update showing a rise in gold and silver prices just prior to today's announcement of the Non-Farm Payroll Report, which is due out in a few hours from now. In our weekly update, which will be published tomorrow, we shall give a complete rundown of today's data and how we expect it to influence both the dollar and precious metal prices moving forward. So the videos that we produced yesterday was entitled Market Update, Gold and Silver Prices Rise Above Previous Resistance Levels. Now earlier in the week we also published a range of videos which we believe to be pertinent as we enter into an environment of easing lockdowns and hopefully eventually the continuance of trade, albeit initially to a limited extent. Now those videos include global recovery may start in Asia, not America, gold and silver premiums falling, we told you so, and end of globalization, effect on gold and silver prices, and we've placed links to each of these in the description box below. Now at the time of producing this video, which is 11 o'clock GMT plus 1, Asia Pacific markets have closed up between 1 and 2%, and UK and European equity markets are trading up 1%. Now gold stands similarly to the price we issued in yesterday's video at $1,722, but silver has risen again from $15.39 to $15.50. The interesting news today, however, is not the price of gold and silver currently, but the price of Bitcoin, which earlier today rose above $10,000, though currently it stands at $9,845. We shall read a brief article published by Bloomberg this morning concerning this fact. Bloomberg Article dated May 8th, 2020. Headline: Bitcoin tops $10,000 first time since February, before halving. The world's biggest cryptocurrency rallied back above $10,000 ahead of a technical event seen by some as having driven the price higher recently. Bitcoin rose as much as 2.7% to a high of $10,070 on Friday in Asia trading, briefly taking it into five figures for the first time since February the 24th, and was holding just below that level at $9,974 at 10:25 a.m. in Hong Kong. That's before the cryptocurrency's upcoming halving, when the rewards miners receive for processing transactions will be cut in half as soon as May the 12th, an intentional feature of Bitcoin's design to control inflation. Quote, Bitcoin trades sentiment-driven at its peaks and valleys, and the post-halving hangover is part of the normal price ebbs and flows on top of Bitcoin's fundamental value, unquote, said Yehan Chi, managing partner with blockchain investment and advisory firm Kinetic Capital. The cryptocurrency has more than doubled in price since mid-March, joining a wider rally in global equities since getting rocked by related volatility that depressed economic growth, consumption activity, and corporate earnings. Quote, markets have been bullish since the March lows, and this is across asset classes, including crypto, unquote, said Vijay Iyer, Singapore-based head of business development at crypto exchange Luno. Money printing by the Fed and other central banks globally have given a lot of confidence to investors that the economy will be supported no matter what. Paul Tudor, or I should say Paul Tudor Jones, founder and chief executive of Tudor Investment Corp, said he bought Bitcoin as a hedge against inflation he sees being stoked by massive fiscal spending and bond buying by central banks to combat the pandemic. Jones previously dabbled in Bitcoin in 2017, doubling his money before exiting the trade near its peak at almost $20,000. Bitcoin will likely see sub $10,000 levels post-halving, but the surge in institutional interest from investors like Paul Tudor Jones is undeniable validation for Bitcoin, Chi said. While Bitcoin has been notoriously volatile over the years and crashed spectacularly after a peak near $20,000 in December 2017, it has also slowly been making inroads. Regulated exchanges have gradually been offering more in the way of products like futures and options around the asset, and institutional interest has been building. Cryptocurrencies still have their fair share of skeptics, from Warren Buffett to Nouriel Roubini. And data last month from PricewaterhouseCoopers LLP showed the industry struggled to attract mainstream investment last year as global fundraising and deals both dried up, including a 76% collapse in M&A value to $451 million, M&A being mergers and acquisitions, from almost $1.9 billion the year before. So that's $451 million versus the previous year of $1.9 billion. Quote, "With the Bitcoin halving fast approaching, we believe a short-term pullback is highly likely immediately post-halving as traders begin to take profits," unquote, said Leonard Neo, head of research at Stack AMPTE, which provides cryptocurrency trackers and index funds. In the longer term, we can expect Bitcoin to register significant price appreciation toward the end of 2020 and early 2021, unquote, end of article. What piqued our interest is that this article suggests that whilst most institutions are not convinced as yet concerning Bitcoin, there are some investors who are potentially viewing Bitcoin as a currency hedge, and not necessarily this environment being only limited to gold and silver. Added to this pressure is the more favourable tax treatment of Bitcoin in the United States. An article was published in Forbes yesterday pointing this out. We shall read it to you now. Forbes article dated May 7th, 2020. Headline: Bitcoin versus gold. Which is more tax efficient investment? With the rise of unprecedented money printing by the Federal Reserve, the Bitcoin versus gold debate is trending. There are several benefits of Bitcoin over gold as an investment. Often overlooked, however, are the significant tax savings associated with investing in Bitcoin compared to gold. The result, for a savvy investor, considerably higher post-tax returns. Short-term tie. In the eyes of the IRS, short-term means a window of 12 months or less. From a tax perspective, there is no difference in taxes on Bitcoin and gold on short-term gains. Let's say you purchase one Bitcoin on January the 2nd, 2020 for $3,000 and sell it on July 5th, 2020 for $10,000. You should have a taxable gain of $7,000. This amount will be subject to ordinary income taxes, which is based on your tax bracket. If you substitute Bitcoin in this example with gold coins, bars, or gold ETFs, you would end up being subject to the same amount of taxes. Long term, 8% saving for Bitcoin. Investing in Bitcoin could save you up to 8% in taxes compared to investing in gold if you hold your investment for more than 12 months before selling. In other words, a long-term investment. Cryptocurrencies like Bitcoin are treated as property per IRS Notice 2041-21. Therefore, resulting gains are subject to capital gains taxes, maximum rate of 20%. If you sell your crypto after holding for more than 12 months, you are therefore subject to a maximum capital gains tax rate of 20%, irrespective of the amount of profit you make. This is not the case with gold. Precious metals like gold are treated as collectibles under the IRS guidance. Collectibles are subject to a maximum capital gains tax rate of 28%. This means if you have the same long-term capital gain on a Bitcoin investment and a gold investment, your post-tax return on investment, your ROI, will be 8% higher on the Bitcoin investment because you pay less taxes. Shrewd investors looking for long-term growth and hedges against the macroeconomic climate have one more reason to consider Bitcoin as part of their portfolio. In the Bitcoin versus gold battle, Bitcoin clearly wins when it comes to tax treatment. End of article. So, from a tax perspective, we can see that with investments of 12-month duration or longer, Bitcoin has better tax treatment under US tax law. Now, before anyone accuses us of advising or recommending or even suggesting that you should not buy gold and silver but should buy Bitcoin, we assure you we're not doing this. There are many reasons why gold and silver surpass Bitcoin as an investment, and a few reasons why the opposite is the case. What we are saying, however, is that even though we ourselves do not invest in Bitcoin, we can see it becoming a serious alternative to gold investment as the vagaries of inflation eventually sift through the economy as the result of considerable money printing through various forms of quantitative easing. Now, there is little doubt that Bitcoin provided a substitutional effect in previous years for the investment in gold, but so did the equity markets, with the latter now seen in its final stages of any form of a bull market, or the beginning perhaps stages of a bear market. It is debatable. Just bear in mind that the only alternative to the dollar and equities is not just gold and silver. This is yet another reason why, although we do believe gold and eventually silver will benefit from inflation in years to come, it's unlikely to reach the unprecedentedly high levels that the gold and silver pumpers would have you believe, certainly within the time frames that they express, as you can be assured that other alternatives also currently exist and may even be introduced. Now, we are still investing in gold and silver, but we have what we term as realistic expectations. And let's just assume we're wrong and their prices do skyrocket. Then we shall be pleasantly surprised, rather than expecting them to skyrocket, and if they don't, find ourselves being sorely disappointed. What do you think? Do you see Bitcoin or other cryptocurrencies challenging gold and silver as an investment? Do share your thoughts. Meanwhile, thank you so much for listening, and if you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos as and when they're published. Not forgetting, we update our Richard and Greg channel every few days, and we will be publishing an update this evening in UK time, so it'll probably be afternoon in US time, as Prime Minister Boris Johnson is likely to make some form of statement this morning concerning the UK. And please do not forget our weekly update, which will be published tomorrow. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.